Hello guys, it's Max here from Daily Market Movements, and in front of me is the Nasdaq 100 future chart. As you can see, Friday we're trading in the red. Last night we had Joe Biden, who announced his plans for the stimulus deal that he hopes to unroll once he takes power of the White House next Wednesday. And I think it's fair to say that investors weren't too impressed. Reason why is because in the stimulus roll, he has a policy where companies must pay a minimum wage of $15 an hour. You might think to yourself, that's not that much money. The likes of Apple are making, $80 to $90 billion a quarter. Yes, you are right. Some of the biggest companies in America, it's not a problem for them. But for who it is a problem are the small businesses of America, the businesses that have really struggled over the past couple of months because of COVID. They've had to be shut. They haven't had much stimulus aid. Because the government has just been shambles. Let's be honest, this whole Democrats and Republicans negotiating this second stimulus deal has just been long and exhausting for the small businesses of America. And now they've just found out that they have to pay a minimum wage of $15 an hour, which is it's an additional expense from business perspective. So that's why investors are a bit worried, a bit cautious about this second stimulus deal. And it's a very big stimulus deal as well. You can't just borrow trillions of dollars and just act like you never have to pay it back. At some point, sometime, whenever it is, most probably not in our lifetimes, this money is going to have to be paid back. So that's why the markets are a little bit cautious in trading today. All three indices are trading in the red. Nasdaq did trade significantly lower. We dipped briefly below 12,800, but since then we've paired our losses, and we're kind of trading just below all-time highs. So if you look at the bigger picture, although this week we are trading in the red, we've had a negative week this week. Things aren't looking so bad. We're trading just below all-time highs, up just below 13,000. Earnings season kicked off today as well. We had JP Morgan and Citigroup who reported earnings. To the big tech names, for those who've been watching my videos for some time, I'm anticipating extraordinary earnings this quarter, blowout quarters, beating estimates. So I'm very bullish in the Nasdaq 100, and any dips are to be bought. One positive about this week is that it's really calmed down the RSI. The RSI is now at 56. That is a dip worth buying, and I think going into next week, we do target a new all-time high. So I would be a buyer up towards 13,000. We were trading at 13,000 yesterday, and that gives us roughly a 1.5% rally from where we're currently trading now. So I'm a short-term, medium-term, long-term buyer. No interest in selling. The fundamentals are excellent for the Nasdaq 100, and the technicals are even better. I'm trading in a new bull market just below all-time highs. I'm a buyer.